Namaste friends, welcome back to GyanVeda channel, and today we have come up with an interesting video on the top equity mutual funds. So we will tell you how we could find the top 3 funds in this category for your investment. So please watch the video till end and you will get an extra tip also at the end of this video. Had you visited the channel for the first time, I request you to please subscribe, like, share. Don't forget to press the bell icon so you will get notifications for our new videos. In market, we have many options available in focus funds category. You can see this list on the screen also. And we try to find top 3 funds for your investment. Also, we will discuss about the risk involved, then how the returns we expect, then what is the strategy of investment. All these questions will be answered in this video. Focused equity funds are basically active managed funds. So it will have a small set of stocks involved in the investment portfolio, and most often these will be like identical stocks which will be targeted for similar returns. So your portfolio will be quite concentrated. At max, this fund can have 30 stocks as per the SEBI guidelines. The focused segments of the sector is the specialty of these type of funds. Also, you might see sometimes the asset classification will be diversified across the large, mid and small cap. So you might get the flavor of flexi cap also in few of the focused equity funds. In addition, we can see in focused equity fund, you will have limited or low diversification. Then it is expected that fund managers will have a precise exposure for the stock selection. For that, the quality research is expected from the fund house or the AMC. So fund manager must pick the best of best stocks for the good returns. So many times fund manager go by the conviction based on the research or the study that these stocks or shares could outperform the index in the long run. So here the fund manager will always target for high returns with this concentrated portfolio. When we compare the focused equity funds with diversified funds, what we could see, most often the fund manager uses the down top approach to pick a specific stocks and then estimate the potential return in the future. So fund manager has to pick the right stock at right time that will enable to get the high returns over the long term. Then fund manager must have the eagle eye vision for the stock selection. So fund manager expertise is most important factor in focused equity funds. We think that there are certain risks associated with focused equity funds. So first is that these funds will have higher than large cap risk. Also they will have higher risk than the flexi cap funds also because of the concentrated portfolio. What observation is that most often they will have the higher expense ratio than the other funds in the same AMC. If fund manager does not do the rebalancing on time, it could impact on the returns. On your screen, you can see many options available for the investment in this category. So we have a list of 23 funds available for your investment. So from this, we have found you 3 best funds for your investment. So what are our expectations from these funds before we disclose the list of 3 funds as a top? So expectations are these funds should be able to beat the index consistently. When there is a bull run in the market, these funds are expected to perform better than the index, and when there is a bear run, it should fall less than the index. Also, these funds should have the lower volatility compared. When we compared the lump sum investment as the SIP investment, also these funds should be able to perform well. So these criteria we had used to find out the best funds for your investment. There are many indexes available in the market and there are multiple funds in the focused equity fund category available associated with those indexes. So let's see, Nifty 50 is having the top 50 stocks with the large cap sector. Nifty 100 is another large cap index with top 100 as per market capitalization. Nifty 200 is belongs to large and mid cap. In this category, Nifty 500 is having the large cap, mid cap and small cap combination. Similarly, now at the BSE end, we will have Sensex, which is combination of top 30 stocks. Then BSE 200 is top 200 stocks with large and mid cap market capitalization. Then BSE 250 also similar large and mid cap, and BSE 500 is a combination of large, mid and small cap. So we have many options available in focused equity funds associated with these indexes. When we talk about Nifty 50 index, so we can see we have four options. So green color shows that these have outperformed the respective index. So in Nifty 50 category, we could see Axis has a good performance. It has outperformed for 1, 3 and 5 years. It doesn't have presence for last 10 years. ABSL focused equity fund has outperformed for 10 years but not in last 1, 3 and 5 year comparison. The next index is Nifty 100. Here we have option of two funds. So IDBI has not outperformed in last 1 and 3 years, and Quant Focused has outperformed for 1, 3 and 10 years but not for the 5 years, but it has less AUM. All the returns what we are giving for this comparison are rounded to a closer decimal digits, and these returns were taken as of 31st August 2021. When we compared Nifty 200 index, here we have option for three funds. The two funds which have outperformed for last 1 year does not have presence before, so we could not take them for a comparison. BNP Paribas also not existed for last 5 years. So there is no enough data available to get the alpha, beta and Sharpe ratio. In Nifty 500 category, we have three options available. So Franklin India Focused Equity Fund outperformed for 1, 3 and 10 years duration, and HDFC has presence for over 10 years but it could not outperform yet in this category. Now we switch to Sensex. So Sensex has only one option in the focused equity fund category, which is JM Core 11 fund, which is combination of 11 stocks, but it could not outperform the index yet. So if you are like low risk and low return category of investors, you might need to think on this fund. The funds associated to BSE 200, we have four options. DSP has longer presence in market but it could not outperform the index. HSBC has presence for just 1 year return available here. It could outperform but we don't have the alpha, beta and Sharpe ratio available. iifl has presence over 5 years and it consistently outperformed the index. Also it has a decent AUM available. In BSE 250 category, we can see here option of only one fund as principal focused multi-cap fund, but it has outperformed for 1 year, 3 year and 10 year category and AUM about 660 crores approximately. In BSE 500 category, we could see like we have 5 funds available for comparison. So here you can see here Nippon and SBI looks to be good here because and they have presence for over 10 years also, but the risk could be little higher as this will have more exposure towards mid and small cap also. Other funds, ICICI and IDFC has longer presence but it could not outperform the index yet, and Union Focused Fund is comparatively new. You can see a chart in front of you which is showing all these top funds across each indexes. So you can see here most of the funds will have presence over the 5 years. You will see here 1 year, 3 year, 5 year, 10 year returns as available. Then asset under management, their SIP score we have calculated based on last 5 years. Also the total expense ratio for regular and direct funds. So as all these factors will impact on your return, so these are important factors to be considered to find top 3. Now time has come to find the top 3 ones. So let's disclose. Third number got for SBI focused equity fund, then Axis focused 25 at the second, and first position is going to IIFL focused equity funds. Now let's compare the performance of these three funds. So when we consider these top three funds, you can see here 1 year, 3 year, 5 year, 10-year returns, AUM, SIP score, then expense ratio for regular and direct funds. So here you can see all these three funds belong to three different indexes. If you are having little low risk ability, you might think of Axis Focus 25 fund. Then iifl belongs to large and mid cap, so you can consider this, and it has presence over 5 years, these first two funds. SBI is quite older funds having a decent amount of AUM. Here you can see the returns for 10 years also, and consistently it has good performance, but exposure wise it has exposure to large, mid and small cap as per this index. Before investing, you should be aware of the tax. If it is an equity kind of fund, then you will have STCG apply for 15% plus cess if it is redeemed within a 1 year. For long-term capital gain, which is over 1 year, will have 10% plus cess, but there is a provision of having 1 lakh profit exemption. Now, if you are looking for investment in the focused category fund, you should have a certain strategical steps. You should know what is your risk ability, what is your goal to be achieved by investment, and what tenure you can provide for these funds to grow and get the power of compounding. You should have your own research or have a advice which will help you in the long run. Also, you should take a look at the expense ratio and AUM for specific fund from the AS. Also, SIP is the best option. There is STP also good option in case you have a lump sum amount available right now. You should be aware of the tax. All these things are covered in many videos in our channel, so you can take a look at the channel for the better videos. GyanVeda will come with many such videos, and already there are many videos available in this category to make your investment life happier. So if you are not done, request you to please subscribe, like and share. Don't forget to press the bell icon so your investment will be happy and same will be for others. Thanks for watching. Dhanyavad. Namaste.